Hi, I'm Deb Prior from Priority Tax Services. I'm the owner, and I'm located at 983 Main Street, right in downtown Manchester. I've been doing Priority Tax Services for it's a little over 10 years now. I'm entering my 11th tax season. I added bookkeeping services about 8 years ago, and I have two awesome part-time bookkeepers that are QuickBooks experts, and they just do a great job. I don't know that everybody always wanted to be, an accounting or tax preparation person, and the people that know me, have known me for a long time, are shocked when they hear that I'm a tax geek. I got into it because I actually started as a master gardener, a landscaping business, a small landscape design business, and I was looking for something to do in the winter. And I just thought, with my background as a financial advisor, I understand certain aspects and important aspects of the tax law. Why don't I start doing taxes? And once I started, I found that I loved it, and I just wanted to continue to increase my expertise, which is why I became an enrolled agent. I ended up settling in Manchester because when I started out my tax career, I actually worked at one of the retail tax locations. I thought that was a great way to get started and to learn. So I became active in the Manchester Chamber of Commerce, and I made a lot of connections with businesses in town. So when I decided to open my own practice, it just made sense to me to be located in a town that I've come to love. I have a practice that is open all year round, although I have to admit that when it's not tax season, I'm not always in the office, but all my clients have my cell phone. An EA is the designation after my name that means enrolled agent, and it's an IRS designation that requires passing exams and continuing education. So it's different from a CPA, because an EA's total focus and specialty is taxes. A CHFC is a chartered financial consultant. I have a background as a financial advisor, and that was another designation that required testing. But that sets me apart from a lot of tax professionals because as I bring that financial advisor to the table when I'm working with a client, I see things in their tax return that may need attention. The IRS keeps up with EAs as well as CPAs, and they have in their database all the continuing ed credits that we have. And it's very important because sometimes they will audit somebody like me to say, give us proof that you completed all these credit hours. So I have a file at home, and for that very reason. But my organization, the National Association of Tax Professionals, they also keep records as well. Client education is a part of my practice that I offer to anyone who has questions about their tax return and want to plan ahead. I also offer free consultations to business owners that are just starting out. Hopefully they come and see me and talk to an attorney before they do something they'll regret later. I specialize in all kinds of tax returns. I work a lot with small businesses, and those businesses take on several different forms, and I work with individuals as well, whether it's an income tax return or an estate return, trusts. We do it all. I help small nonprofits with their tax return. It's very simple. I don't charge for it. I show them how to do it themselves because it's very simple. But the Form 990 for the large nonprofits, I usually refer those out to a CPA firm in town that I have a very good relationship with. A very common mistake that they make is they don't document their business mileage. That's a big one, because if that's not documented and logged, either using an app on phone or a written log, the IRS will not allow it, and that is a very big tax deduction. That's a mistake that I see a lot of people make. What's important is not just the numbers, but the IRS requires that you write the destination, where you're going, and what the business purpose is. But it's important to keep track of all the places you're going. Also, it's important, do not count commuting miles. The other way that people can take a business miles deduction is they still have to track miles, but they can deduct gasoline, auto repairs, and some depreciation on their car. So it has to be one way or the other. My experience has been, and I tracked it both ways for myself for 4 years in a row, it's much better to take the standard mileage deduction. It's a much more generous deduction. People that don't own their own business, if they're tracking miles, they can track miles for the company for 2017. People can also track miles for charity. If they're doing some charitable work for a nonprofit, they can keep track. The rate is different for those, but I will say for 2018, that whole ability to deduct the miles for a company that you work at is going away. So that's one thing that's not so great. Another mistake is that certain expenses are treated differently. Some you can completely deduct, others you can't. But there's another way to treat it on the tax return. Connecticut taxes have been changing a lot lately, and they've been changing because of the budget problems. And the changes aren't consumer friendly at all. They're taking away more. They've been reducing the property tax credit every year, and now this new year, if you're a single person without a dependent, you don't get the credit at all. For the 2018 tax year, for some people are going to fare very well, others not so much. The answer to any tax question is it depends. So just at first blush, I would say that homeowners, middle-class homeowners, are not going to fare as well. Business owners will do pretty well because they're going to have a 20% deduction right off the bat. Lower income people will do well. The standard deduction is doubled, so that will work for a lot of people. So there's pluses and minuses to 2018, and what I'm trying to do in my practice is when my clients are coming to me this year, I'm looking at their tax return and talking to them about what they can expect for next year in case there's any changes they want to, or adjustments they want to make. I'm a tax expert, so I know the tax law, and people think that, oh, it's so easy just to type in all the numbers. Well, it isn't. I mean, that is easy, but it's not always correct, and you can get yourself into a lot of trouble by doing that. When people do their taxes with me, there's two things. I have a package that I add for an additional fee called Protection Plus, and that guarantees that if they get any letters from the IRS or get audited, that this Protection Plus is going to help them. On the other hand, if I don't sell them that package and they get audited, if I made a mistake, I refund their fees, and if they incur any penalties or interest, I pay those. So that's my guarantee. If there's an audit, I have to charge for an audit. The audit wouldn't be happening because of my mistake. Because what usually happens is if there's a mistake, a person gets a letter from the IRS saying, hey, there's a mistake here. And then we try to take it from there. Any mistake is not immediately an audit. There are letters that the IRS sends out called CP 2000s. Those are all computer generated. That's why when somebody says, oh, I got a letter from the IRS, I say, what's in the right-hand corner? Just because I have to know what kind of letter it is. And then, of course, because they don't really communicate clearly, I need to look at the letter, and then we'll take it from there. For people that have health care, this came in under the Affordable Care Act. People had to receive a 1095, A, B, or C, from their health care provider as well as their employer, just to prove that they have health insurance. That if they didn't, or if they didn't pay enough for the health insurance, it's possible that their taxes will be increased. That's part of the Affordable Care Act, which gets very complicated. And that requires people to have health insurance, and if they don't, then they have to pay an additional tax. And that is going away in 2019. That requirement will not be there. That's as it stands now. People will not have to pay that additional tax penalty. If you're itemizing your deductions, there is a health expense deduction, but there's a caveat to that because the total of your health expenses out of pocket would be what you're paying for your deductible, what you're paying for your co-insurance, even your health insurance premiums. And if you have long-term care insurance premiums, all of that, when that total is higher than 10% of your adjusted gross income, you can deduct it. In 2018, that's going back to 7.5%. Any stock that's held for less than 12 months and sold is considered a short-term capital gain, and it's taxed at the income tax rates. If it's held for more than a year, then and sold, it's taxed at the long-term capital gains rate, which is much lower. That's why people that are doing a lot of day trading, they're paying regular income tax on those sales. A lot of people were being advised to pay their property tax that was due in 2018, in 2017. And the IRS guideline on that was if you actually had the bill in your hand in December, they would allow it. So I'm thinking there's a lot of people that took that deduction in 2017 or are going to take the deduction in 2017, and it won't be allowed. There used to be a tax deduction for buying energy efficient appliances, also for adding energy efficient properties to your house like replacement windows and all of that. But all of that expired at the end of 2016, and as of yet, Congress has not voted to extend that. But the appliance credit, that went away a long time ago. So it used to get a deduction for electric cars. It doesn't, you know, it's gone away over the years. The biggest thing is energy efficient improvements to your house. And if you itemize, you could get that credit. If you're just flipping a house, that's considered inventory because you're not holding it for investment purposes. You're doing what you need to do and then selling it. So it's not reported on a Schedule E. I don't mean to get technical on you, but anybody who rents a house fills out, or apartment building or whatever, fills out a Schedule E. If somebody's flipping, it's treated just like any other business on a Schedule C, unless they have another business form, but it's still Schedule C and it's considered inventory. Right now, I am focusing a lot on adding more clients that have rental properties. As a realtor in the off-season, I understand all the tax implications, and people that own rental properties, or even people that are flipping houses, don't understand how that's supposed to be treated on a tax return, and they're both treated very differently. So I would like to add more clients to my practice that have that. But other than that, other than growing, my plans for expansion are to add another tax preparer and go from there. I've been very fortunate that my client base has doubled every year, and I feel very proud that most of that business is referral business. My clients know that I care about them. I care deeply about them, and I am trying to get them the very best outcome on their tax return. First of all, that's legal. But I look at a lot of different pieces because there are a lot of moving parts, and somebody who just enters data into a computer isn't going to get to the bottom of certain things. There's a lot of questions that I ask instead of just taking things at face value. because I know there's going to be a difference in how I'm going to treat it on the tax return. And because I was a financial advisor, when I see things that need to be addressed, I bring it up and I will refer them to one of several financial advisors that I work with.